let's just inflate more of the currency so we can stave off inflation. This is insanity. This is literally mental insanity.
The main emotion I feel when I think of why one should buy Bitcoin is outrage. Because when I go to the bank and put my money in a savings account where I get 0.03%, that is outrage. Because if I was my own bank, if I really had control of my money, I could make 3-4% in treasury bills, or maybe even slightly more risky assets.
The purchasing power of fiat currencies has been dropping precipitously every year for the last 50 years. And in the last 10 years, 15 years in particular, it's gone down 70, 80, 90% in many cases, including the dollar. Bitcoin is a deflationary asset because of, and people need to understand this, because of finite supply caps that are cryptographically secure and cannot be inflated.
And JJ, everybody's asking for the latest TAO pod. I feel like a lot has happened in the TAO universe, the TAOverse, since our last podcast.
Huge amount. It's hard to enumerate. And I guess apologies to the community for slacking off a bit. I think our last show was almost a month ago or a few weeks ago.
I was going to say 3 weeks ago. And
Yeah.
so I would say, I mean, there's lots of things and there's been almost announcements every day in the news, but
Yeah.
the main things that have kind of been like, that have taken up Mindshare, I would say 3 things, and correct me if I'm wrong. There's the TAO Halving and various arguments about who it's good for, who it might not be good for. Is it ultimately bullish? Stuff like that. I'd love to talk about that. There's, of course, always developments with the subnets. I feel like that tipping point is getting closer and closer every day, where 1, 2, 3 of the subnets, maybe more, are going to be not only solidly better than their centralized AI counterparts, but starting to be big in the news. Like, people know about it, and that's going to teach people about TAO. And then third, I would say just institutional engagement with the TAO ecosystem. Like DCG announced index funds, which can buy subnets, and that's never existed before. So it's an institutional product which allows other institutions or accredited investors to buy subnets. And what that does is not only provide access to investors in this safe, quote unquote safe way to the subnets, but also you have to buy, in order to buy a subnet, you have to buy TAO and kind of convert it into the subnet token. So that's going to create enormous buying pressure on TAO if these products are really picked up. So I think those 3 things have been kind of like the main newsmakers in the TAO universe.
Definitely. And I would say, broadly speaking, at a macro level, like, we're in a very much risk-on kind of environment. Rates are coming down. There's a lot of optimism about cryptocurrencies in general. Stablecoins are blowing up. I know you're supporting different things with stablecoins. There's massive institutional adoption there. And then crypto policy, I think, is making institutions more comfortable to support a wide range of cryptocurrencies, massive trading inflows into Bitcoin, which is sort of the proxy asset for really all of the cryptocurrencies, including Bittensor. And I just noticed earlier today, I think the state of Florida in the United States is allocating like 10% of the state's budget to a Bitcoin reserve, which is
wow, I didn't know that.
Yeah, it seems kind of like a notable thing, but it's sort of like not terribly surprising since we have a national Bitcoin reserve kind of emerging at the sovereign level with the United States. I know Texas did something similar at the state level, investing in Bitcoin, a lot of other states. So there's just a lot more capital kind of getting transformed into this new representation of money. This Bitcoin asset is really ballooning. Another thing I've noticed, which is probably something that we've encouraged or helped with, is just a lot more content about Bittensor in the ecosystem. Like, there's a lot more social commentary, buzz, a lot of people creating like how-to guides, tutorials, videos. There's another documentary on Bittensor coming out pretty soon. Going to be in James. And so, yeah, it's really, I think, an inflection point for the project. And it's all kind of coinciding, like you mentioned, with this halving coming up in about a month, actually. A month and change, there's going to be the first TAO halving, which marks the basically 50% reduction in the emission of TAO into the network across all the subnets. And correspondingly, this kind of constriction in the amount of circulating TAO that sort of gets emitted over the next 4 years. And then it happens again every 4 years. And so there's definitely a lot of chatter about that as well.
So, and all this is good. I want to kind of, towards the end of the podcast, I want to kind of summarize them in terms of which ones I think are the biggest catalysts for TAO price, which of course I think is going to 3, 4, 5,000 and then continuing. But that's just a teaser in that I want to ask you about the halving. So the discussion is basically, and by the way, there's been so much discussion about this. I even weighed in my own opinion privately. I wrote to Jake Steves, the founder of TAO, and expressed my opinion, and he graciously responded. But I want to ask your opinion. So there's one side of thought that says, hey, new subnets might be in trouble with the TAO halving because they won't get the benefits of the old school subnets that had massive amounts of TAO and alpha distributed to them into their liquidity pools, before the halving, and now that's all going to get cut. So will new subnets be hurt? And just to put it in layman's words, a subnet, you could think of it as a startup company that gets the benefit of TAO's incentive mechanisms to incentivize people from all over the world to basically help provide resources so the startup could basically launch with the top talent at minimal costs. But they benefit from that because they're getting these TAO emissions and what's called alpha token emissions at today's levels and today's prices. When the halving happens, they'll get fewer emissions. There's some discussion, will this be bad for newer subnets, which in turn might be bad for TAO? Because again, the more interest in subnets, the more people have to buy TAO, the more buying pressure on TAO.
It's a really big question. I would offer a technical answer or a sort of technical answer, and then a separate, broader, more analogy-oriented answer. On the technical side, when this dynamic TAO system was released in February of this year, so this is really only 8 or so months ago, an enormous amount has happened since then. Obviously, we started the podcast, but so many new subnets were launched. Yeah, of course. Tons of subnets were launched. I think we had 50, 60 subnets in the beginning of the year. Now there's 128 fully registered, and the vast majority of those are actually running live incentive mechanisms with mining activity and all that. I think at a technical level, a lot of the tokenomics implications for alpha tokens, which are sort of these TAO-denominated currencies for each one of the subnets, were reasonably spelled out in the DTAO paper, which is from mid-February of this year. So I would encourage people to look that up, read about it. There's some caveats about certain design changes that were sort of more open-ended, that we need to just kind of see more data and more network activity to make decisions on. But there's also just this kind of massive amount of data that we've seen in terms of the way in which price discovery has happened as it relates to active staking or active kind of investing activity or investing flows. What you can kind of think of in Bittensor as the core reserve currency of the network is TAO. And then any TAO holder can take that TAO they hold and basically express it as a kind of bet or an investment decision or conviction in one of these alpha tokens. And so you stake TAO, a fraction of a TAO or multiple TAO, and you basically stake it into one of these alpha tokens on a subnet. And what it does is it converts the TAO into a sort of fraction of the liquidity pool of a subnet based on the circulating alpha in that subnet, right? So if there's 1,000 alpha in the subnet and 1 TAO equals, 100 alpha, so 10 TAO would equal all of the liquidity in the subnet, right? This is just a simple example. If you were to stake 10 TAO in that pool, right, this price is going to move up massively because you're literally buying effectively all the liquidity. And that might not even be possible based on the circulating supply. And so what ends up happening is you have this kind of protocol regulated and permissionless pricing mechanism that allows these subnets to sort of discover the price points that can be stabilized for rewarding miners on the subnet and rewarding validators, but also basically creating a kind of synthetic order book or something that roughly approximates an order book that you would see on a traditional stock exchange or on a crypto exchange in terms of the buy pressure and the sell pressure. So there's a lot of technical details here. I'd encourage people to look into that. But I think the big design change with Bittensor in February was massively different from what existed before, which is where you really had validators determining how the TAO was allocated to each one of these subnets. And there were really only 3 or 4 dominant validators, right? So it's kind of like an oligopoly. It was like 3 or 4 or 5 people essentially deciding where the TAO would actually get allocated. And obviously that's very centralized and sort of unhealthy in terms of like the mission of the project, which is to create this permissionless, a much more democratic and free market capitalism type of allocation structure. And so DTAO was really a huge step forward to allow for that. And I think it's been hugely successful. I would be very shocked at this point in mid-October of 25 to hear from anyone that DTAO has failed or it's sort of like lacking in some areas. I think in general, the overall feedback is it's extremely positive. I'd say in the first 3 to 4 months, so we're sort of like around month 8, but the first 3 to 4 months, there was a lot of skepticism around the design because the liquidity, the alpha injected, right, denominated in TAO into all of these alpha tokens was very thin, right? And that's just a function of time. The emission schedule for subnets mirrors TAO, which perfectly mirrors Bitcoin, but it's just a little bit faster. So subnets basically emit the alpha a bit faster.
Each subnet has its own crypto token. We're referring to it as the alpha token, but the alpha token for each subnet is different. So like subnet 1 has their own 21 million alpha tokens, crypto tokens. Subnet 2 has their own 21 million, and on and on.
Correct.
DTAO gave the ability for each subnet to decide how to award miners with incentives with their own token. It gave everybody their own crypto token that's essentially tradable.
What I would say is important to understand is the answer to your question is yes, that's correct. However, these tokens come with some very, very constrained and unchangeable constraints, right? To enumerate those top constraints so people can understand clearly, and this is, I think, fairly well understood in Bittensor. The main constraint is that these alpha tokens are synthetic representations of TAO. There really only is TAO. And so all of these alpha tokens, yes, they have their own finite supply, their own finite emission schedule, right? There's only 21 million ever possible alpha tokens. They inflate a little bit faster or they emit a little bit faster, right? Depending on how fast TAO gets staked or injected into them. However, they're also only ever denominated in TAO, right? And so each subnet can create its own token supply when you register it. So there's another 21 million alpha and subnet 512 or whatever the subnet number is, right? But they all follow a start time of emission based on when the subnet was registered. They also follow the same inflation schedule and the same supply cap, which is 21 million. And they also, very importantly, and this is something that people really need to understand, especially as we see Bittensor become more and more successful. This is going to be a big source of confusion, I believe, because there's so many comparisons to Bittensor and crypto writ large. TAO is the exclusive denominated currency for these alpha tokens. These alpha tokens are not ERC20s. They are not printed out of thin air. They do not have zero sort of intrinsic backing in terms of a fundamentally scarce asset that is cryptographically verifiable, running in production for many years, and so on and so forth, right? And so while it is likely true, and by the way, just to maybe pre-announce some things, which we've already seen some indicators of, many centralized exchanges, many popular large exchanges, I won't mention any specifically, but we're going to see a lot of this in the coming weeks and months, will actually start to directly list with liquidity, not just data, not just pricing data, but with liquidity, alpha tokens of some of the top subnets directly on their exchanges. And the way they'll be able to do that is basically swapping or staking transfers of these alpha tokens onto their exchange custody TAO wallet, which will then allow people to basically stake directly in and out of these alpha pools on an exchange. However, very importantly, TAO denominated. These are not ERC20 tokens. They are not denominated in some other cryptocurrency token. You can do bridging, maybe synthetic leverage. You do a lot of other exotic DeFi type things. But the fundamental constraint of these Bittensor subnet alpha tokens is that they are denominated and provided liquidity in terms of TAO and the finite TAO reserve price, which in the current state is around 10 million circulating. When we reach 10.5 million circulating, that means the first halving. And so it basically follows the exact Bitcoin emission schedule.
So I just want to, again, make it really simple for the basic question, which is, let's say I'm buying an alpha token of a subnet on some DeFi exchange out there. What you're saying is what's really happening underneath is if I buy the Ridges subnet token on Uniswap, what I'm really doing behind the scenes is I'm buying TAO, then
Correct.
Uniswap somehow through a what's called a bridge buys that alpha using the TAO that they convert let's say I pay with USDT. They take the USDT, convert it to TAO behind the scenes, and use the TAO to buy the subnet token. So they're
That's
still
correct.
creating buying pressure on TAO. That's the fundamental thing that's happening in the beginning. So as subnets
Correct.
get popular, TAO
Correct.
there's buying demand on TAO.
Correct. Any retail interest to buy an alpha token on any Bittensor subnet that might be extremely disruptive, which we're already seeing signs of with Ridges and many others, actually, extremely disruptive to conventional Web 2 VC-funded startups, will create buy pressure for TAO. And if you want to really ask what are the catalysts for TAO going up, there's many, right? I mean, we could talk about this ad nauseum. There's lots of different indicators. The fundamental, most durable, long-term catalyst for buy pressure on TAO is increasing levels of mainstream retail human understanding and interest to trade alpha tokens. Because when you do that every single time, whether it's through Coinbase or whether it's through TAO app or anyone, you have to buy TAO. Now, whether or not the trader or the retail speculator or whoever needs to know whether they're going through TAO, that's a totally separate question.
Right,
Maybe they don't.
completely.
Maybe they don't even need to know. That's a technical implementation detail. That doesn't matter. But the way Bittensor works in order to preserve these symmetries is TAO is the reserve currency for the network, right? And this is really important to understand. TAO is essentially in correspondence to Bittensor becoming more and more widely understood and successful in achieving its mission. TAO is really the reserve currency of continuously improving technology. In the same way that Bitcoin is really kind of the reserve currency for, effectively a medium of exchange for money or, sort of like generic store of value for sort of any asset. That doesn't necessarily have to mean continuously improving technology, but you can trade it as a store of value. And Bitcoin has really succeeded at that. We're seeing every one of the biggest institutions in the world saying, at least a few percentage points of your portfolio you should allocate to Bitcoin. The crazy thing is, like, even if you had 1% of the world's wealth get allocated to Bitcoin, we're talking about $100+ billion of inbound buy pressure on Bitcoin. And that is equivalent to, I don't know, half or so of the total buy pressure going into Bitcoin every year, right? And so 50% increase is just 1%. And so if we're talking about multiple percentage points, this is why a lot of the biggest Bitcoin bulls like Michael Saylor and others are saying, look, in 20 years, we're going to see 30% compound growth rate. For the last 10 years, we've seen 50, 60% compound growth rate. It's going to go down, but in the next 20 years, we could see one Bitcoin at $10 million, $20 million per token,
Well,
which is incredible.
it's fascinating because there's a reason why everybody's starting to say, oh, we need 1%, 2%, 3% allocated to Bitcoin. And there's a reason why countries and people like Michael Saylor are saying buy as much Bitcoin as possible. And the reason is actually very similar to things you and I have spoken in terms of Bittensor. And for me, and there's no other token that feels this way other than Bitcoin and Bittensor, but the main emotion I feel when I think of why one should buy Bitcoin is outrage. Because when I go to the bank and put my money in a savings account where I get 0.03%, that is outrage. Because if I was my own bank, if I really had control of my money, I could make 3-4% in treasury bills or maybe even slightly more risky assets. Treasury bills are extremely safe. And when you own stablecoins, for instance, you're your own bank. You avoid all of the bank's fees. You avoid all the possibilities of human error. When you send a bank transfer, you avoid a 3-day settlement period. Why does it take 3 days to just send a message on the internet, which is all a bank transfer is? It takes 3 days because they artificially do that so they can get yield on those 3 days. They get all to get, like the US government sends $1.5 trillion a year in Social Security payments to people through bank wires. Guess who makes all the money on those T+2, the 3 days of yield? The banking system does, instead of the elderly person getting the Social Security or instead of the US government. So this is outrage, and crypto, Bitcoin specifically, solves all those problems. Now, what you and I have discussed, where you have opened my eyes to this, is that I feel outraged. Like whenever I buy a stock and then I'm diluted, or if I buy a round in a private company, you and I have a shared experience. We're coincidentally in the same private company that is up 600x from their initial valuation, and we're only being offered 50x to get out of it because there was dilution. We didn't know about it. We didn't give permission for it. It was done outside of our control. There's no dilution in Bittensor. If you have 1% of Bittensor today and you don't sell any, you will always have 1%. You will not get diluted out of your 1%. And so there's so many things. I could go on forever on this, but outrage is a strong catalyst on both Bitcoin and Bittensor.
I totally agree. And I've been privileged to be a professional, well-compensated venture capitalist for almost 10 years of my life. And it was really actually only until a couple of years ago, which I'm actually quite embarrassed to admit, that I viscerally came to terms with and started to really appreciate from empirical experience the catastrophically painful effects of dilution. And you really start to create these creative solutions for how do you mitigate dilution, right? So as a VC, you have some tools. You have some tools, right? As a mainstream consumer living in a country that holds a fiat currency that is the store of your wealth for toiling and suffering for generations to create a livelihood for your family, you cannot have an influence over how the Fed prints more money. There is no mechanism for that.
Zero.
The purchasing power of fiat currency has been dropping precipitously every year for the last 50 years. And in the last 10 years, 15 years in particular, it's gone down 70, 80, 90% in many cases, including the dollar. With equity dilution, this is something I've been kind of like on a mini rant on. I have many rants, but this is like one of the ones I'm trying to kind of make more widely known. Monetary inflation is to fiat what share issuance is to equity.
Mm-hmm.
This is a technical statement. If you're an investor, you understand what it means, but it's worth unpacking because the second part of that statement is directly, hat tipping Bittensor. And the first part of the statement is hat tipping Bitcoin, right? Monetary inflation reduces the purchasing power of fiat currencies. When you inflate and you print more of the currency, it means that there's an overabundance and expansion in the amount of the value that you represent in that currency. Therefore, the value of it goes down. This is not a complicated concept, right? It's kind of like saying, look, I'm creating this really scarce thing. It's rare, super valuable. And then you're like, oh, wow, so there's not too many of these things. It's really rare. It's valuable. And then all of a sudden, the next day you say, well, sorry, actually, look, it's identical. I copied it 50 times over. Now there's 50 of it. What do you think is going to happen? Of course, it's worth less because there's more of it. That's how inflation works. You inflate, and then it creates less value. It takes away value. It steals value. That's what happens with fiat currencies. People are becoming more aware of this. What is not as understood, especially for founders that choose to create, and I don't want to go on a tirade to say, startups are bad. Yeah, I don't think we're there yet. Maybe we eventually get there. It would be very painful to admit that because I've invested a huge amount of my career in startups, and I love startups. Startups are amazing. They've changed the world. Companies have changed the world. But the one thing that they all have in common is they have this thing called shares and stocks, right? Public and private companies have this. And what federal banks do with monetary inflation also occurs with corporations. People do not actually understand how this works. Whenever you raise what's called equity capital, you do exactly what the Fed does when they look at the labor market data and they look at the CPI, inflation and jobs. What do? Shit. Jobs are going down. We have to do quantitative easing or reduce the Fed funds rate. Inflation's going up. Shit. We've got to do quantitative easing, which is increase the monetary supply to lubricate more. What does that actually do? Fundamentally, when inflation's going up, purchasing power, it means that purchasing power is going down. And yet, what knee-jerk reaction does the Fed exhibit when they see that? Let's just inflate more of the currency so we can stave off inflation. This is insanity. This is literally mental insanity. Okay, so what happens with boards of directors of corporations? When they want to raise more money from investors, let's give away 10% or 20% of the company. You don't sell the finite share supply. You don't sell 10 to 20% of the finite share supply of the company. That's kind of what should happen, actually. It's called anti-dilution. Right. In fact, it's actually very frowned upon, but I think if you implement it properly, it actually should be workable. If you do anti-dilution for everyone equally, right? which kind of never happens. But what they do is they issue more shares. They inflate the shares. They create more shares. So what happens is, as a consequence, if you're an earlier shareholder and you own 5% of the company, right, for believing in that founder when they had nothing, when they had no revenue, and they had a prototype, and they had a deck, and a memo, and that's it, and hopes and dreams and prayers, and a lot of gusto and drive, right? Which is what early stage founders really, that's really all they have. And then they shipped a product, they got some revenue, and then a year or two later, they raised money at a 20x higher valuation. Well, they sold 20% of the company at a 20x higher valuation, but they reduced the percentage ownership of your early shares by 20%. Now, in most cases, that's actually not that bad, right? Okay, 20% less ownership of your initial share, that's 5% minus 20%. You end up with what? 4%. It's not that bad, right? It's not that bad. Let's be real. You only got diluted by 1%, so you only have 4%. It's really not that bad. What actually happens, though, is there's this hamster wheel of addiction that develops because raising equity capital, that's a very popular thing to do. That's called venture capital. Venture capital is fucking enormous. It's a $2 trillion asset class now. There's venture capital oozing out of the trees now. If you live in anywhere in America and you're a founder and you start pitching VCs on each of the east or west coasts, you'll likely be able to stumble upon some venture capital dollars in your company if you're doing something interesting and valuable. I'm not saying it's that easy, but it is very abundant of an asset class, especially at the early stages. So what the founders end up doing is they get very addicted to the seed plus, the seed plus plus, the A, the B, the C, and then they go through the alphabet. And by the time the company might actually have something really valuable to bring mainstream retail consumers in the public markets, the percentage ownership of the earliest believers in that company that gave that initial capital got diluted down just as much as fiat currency's purchasing power got diluted down over the last 15 years. Typically 70 to 80 to 90%, which is what happened to us in this situation that you described. Company went up 500 times. Wow. Oh my God, 500 times is incredible. That should be life-changing for us and for the founders, of course, and everyone on the team. Instead, really only life-changing for some of the later stage investors that basically got a free ride, 5 or 10xing their money because they invested 20 times larger quantums of capital than we did, right? Correspondingly, they took much less risk. And so all of this goes back to inflationary assets versus deflationary assets. Bitcoin is a deflationary asset because of, and people need to understand this, because of finite supply caps that are cryptographically secure and cannot be inflated more of.
What do you mean? 21 million tokens total?
Yes.
No more ever.
Yes. Let me just say something that might be a little controversial, okay? Because it's important for humans to understand this. Even if we reach only 10,000 or 100,000 people who hear these things, it doesn't matter to me. I'm hopeful that we reach millions of people or more. But this is really important. 21 million is arbitrary. We should not get too emotionally connected to 21 million, even in the context of Bitcoin. Now, yes, of course, if you can arbitrarily change that number very easily, that's not good because it reduces the value of making that constrained number defensible, right? And it's very important to create a significant amount of difficulty and friction in doing that. By the way, you can change that number on Bitcoin. You just have to own more than half of the hash rate or half of all the Bitcoin, right? That's pretty fucking hard. That's trillions of dollars in difficulty at this point. Pretty hard. Now, what I want to say though, even in the absence of that, whether it's 20 million or whether it's 50 million or whether it's 30 million, it's probably tens of millions with the divisibility that we have because one Bitcoin is divisible by 100 million, I believe. By the way, one TAO is divisible by 1 billion, so it's 10 times more divisible. But Bitcoin has these features because the scarcity is important. If you read the original Bitcoin white paper, Satoshi did not mention 21 million as the explicit design in the first reference to a finite supply cap in the incentive section of the Bitcoin paper. In the incentive section of the Bitcoin paper, what he specifically said was, because of the supply cap being finite and capped, it allows for this deflationary characteristic of the currency to preserve long-term value. It was not mentioned that 21 million was so exactly precisely important to this number. Yes, there's a mimetic and a sort of narrative value to it, for sure. Those things are super important, for sort of like the memification of the message. But I would say it's important for people to understand at a structural and fundamental level, the thing that allows for deflationary price defensibility and removing the notion of dilution is finite supply caps. Now, of course, you can take that really far and you could say, well, JJ said finite supply caps are the only thing we need, so let's make it 100 billion supply cap. Well, again, you have to have a defensible mechanism to say that that can never change. And I think 100 billion is also way too much, especially if you have divisibility, because you want things to be more scarce. And digital scarcity is the thing that Bitcoin literally pioneered and created cryptographically defensible digital scarcity as something that has been widely recognized as the most profound contribution that Bitcoin has ever achieved, of note, irrespective of the fact that it's now this dominant store of value that recently flipped silver, briefly flipped Google the other day, and is on its way to flipping many other top assets and probably staying within the top 5 most valuable assets in the world for quite some time. So I think in the context of Bittensor, it's really important to note, aside from things like maybe Monero and one or two other projects that have not remotely achieved the same critical mass success, Bittensor emulates these design constraints. It emulates them at the subnet level. It obviously emulates them at the TAO level. And in terms of equity, and again, I think this is a little early to sort of like heavily beat the message on, but I believe subnets, as they mature more, with the constrained supply caps of alpha tokens as denominated in TAO, represent a superior way of incentivizing and representing value for digital technology innovation. And in other words, can potentially replace startups entirely.
I 100% agree. And what you were saying earlier about startups, that it is possible to put in anti-dilution provisions into how you issue equity, that's built into the alpha tokens of Bittensor. So again, because there is a cap supply, you can't issue more than the 21 million tokens. And again, the 21 million doesn't matter the number, but there's this fixed cap. And so this was the discussion you and I were having a couple weeks ago. And I was saying, well, what's, these alpha tokens, what value do they really have? When I have equity, I have this ownership of a company, which implies some fiduciary responsibility from management to me and so on. So that's true in general for alpha tokens. But what the subnets are realizing is it's very important that they create real value for those alpha tokens. So that might mean buying back tokens out of your revenues. It might mean at a future date, you promise to buy algorithmically out of your profits some of the tokens. It might mean you require the alpha tokens to be used to buy your product, the way TAO is required to be used to buy alpha tokens. So you have to find some ways to incentivize people to hold the alpha tokens. This was a big concern I had, but you and I kind of talked this through. And then we also talked through kind of with equity is when I sell equity to you in a startup, we have a contract. You might say, oh, if you're selling equity to me, I can't leave as CEO, or you get to get out at a certain price, or I don't know, you get an interest fee or whatever. Some deal is made. And with the alpha tokens, it's not the same kind of deal, but the subnet owner, the company startup founder, basically, which is that subnet, they have to create reasons for people to want to hold the alpha long term. And actually, that's even more important than an equity. Otherwise, the alpha really doesn't have value. If the alpha doesn't have value, the miners figure it out eventually, and then you lose the miners, which means you lose all of the resources that were helping you build your company. So subnets will fail unless they figure out how to insert value into the alpha. And I can trust that essentially they will fail. I trust that they will fail if they don't create value for the alpha. So that means good founders, which you always want to bet in a good founders will understand that, and they will create value in the alpha. So now I would rather be an alpha token holder of a subnet than an owner of the equity of the company behind the subnet, because it's trustless. There's nobody, I can trust the system. I don't have to trust any one individual to not screw me, because they'll fail completely if they try to screw the alpha holders.
Yeah, I mean, there's a few different trade-offs for sure. I would say subnets are kind of a different species of value representation. for continuously improving digital technology. This is a huge idea. We're going to see the notion of Bittensor, which, by the way, has been around for 5+ years now. A lot of people are starting to say the same things. You have Brian Armstrong, who I work with on a company, saying we need to upgrade the financial system, including stocks and equities, and tokenize them and all this kind of stuff. I think without the specificity of how that's done, it's a perverted message, in my view. I don't mean sexually perverted. I mean intellectually perverted, right? And you have to really specify. If someone is given a complete blank canvas to do the same things that startups do with stocks and share issuance and equity inflation. And by the way, again, I'm going to pick on Brian just a little bit more here. He's doing both things, right? He has a company called Coinbase that is a share issuance stock corporation domiciled in the United States that he built, masterfully with great product execution over a decade, took public, is now a publicly traded business, and also holds a lot of these new representations of value, these new cryptocurrencies, both on the balance sheet, but as well as a broker dealer, as well as an exchange, and so on and so forth. And, I think it's very admirable and incredibly admirable what Brian's done to sort of like shepherd and guide and advance the state of crypto legislation, policy, and all the positive things that not just the current administration has done, but, all administrations, frankly, since Brian has been a really big crypto advocate and thought leader, have certainly learned and benefited from that voice. I would definitely give Trump much more credit over the last 3 administrations than the Biden administration, for sure, of course. But I think it's just really important. Crypto writ large does not have the capability to upgrade equity in the way that Bittensor does. This is a really important message. It will get
Yes.
muddied. It will get muddied. It will get cargo culted. It will get co-opted. And the reality is you just have to look at the fundamentals. Can your cryptocurrency abstractly print more token supply out of thin air? Can the insiders have an advantage by pre-mining? Can they have a big advantage by selling a huge fraction of the supply to VCs early on before it's emitted? Can anyone basically go and control the distribution of the supply? These are really, really important things that you need to be asking. And as you know, a few podcasts ago, we talked about this little spreadsheet I threw together, analyzing the top 20 or 30 cryptocurrencies. There's only 2, literally only 2, that have achieved beyond escape velocity critical mass adoption with scarce supply, no pre-mine, and no venture capitalists involved in bootstrapping the asset: Bitcoin and Bittensor. Bitcoin and Bittensor, right? And so my point in putting that data out there, not my opinion, but hard data, is that there is a gigantic mispricing, right? All investment and value discovery is a function of identifying mispricings, right? So let's just share this with the world. Let's share this mispricing with the world. And I think a lot of people have been saying this as well. Bittensor is massively underpriced. If you look at the value, contribution, and capital efficiency of innovation coming out of the top 10 or 20 subnets, it's beyond remarkable. Do the work, do the diligence, look into Ridges, look into Liam, Shoots, Targon, TAO Hash, Hone. There's many Bitcast. There's many subnets that are doing really interesting things. They're running experiments. Many of them are succeeding at different levels. Some of them are seeing contribution from people they don't even know exist. Something you mentioned about startups and subnets as a big difference is also often overlooked. Startups have to hire and recruit one by one everyone who ends up contributing value and the output to the subnet to the startup. With subnets, you set the incentive mechanism and the protocol does the recruiting for you. The protocol does the compensation for you. The protocol regulates the speed of innovation based on how well you design the incentive. Incentives drive behavior. And so what Bittensor is saying explicitly is let's reward and encourage people to design the best incentives. That's phenomenal. That is a profoundly huge idea.
Right. It's all incentive based, which is really what free markets are about. I have an incentive to buy oranges, so I have to work harder making shoes so I can get the right currency that will incentivize the orange grower to sell me oranges. And the orange grower has to pay the people in the fields a certain amount of money. Everything is ruled by incentives. Currency is just sort of the physical offspring of that incentive. Ultimately, it's all incentive based. You give incentives to your shareholders, your employees, your customers, the world at large, and on and on.
Currency is really just the database. It's really just the representation. I always go back to this analogy of you're on a desert island somewhere, you don't have food or resources, right? And you're starving, you don't have a way to access clean water. You're dead. You're going to die in what, like a week or something? Money has no intrinsic value.
Right.
What
Right.
has intrinsic value is the ability for humans to coordinate and create incentives between each other. And something I've been reading about and really excited to see is, I would say, arguably top 5 most important people in the history of AI is a gentleman by the name of Rich Sutton, from Alberta, Canada. And he's the father of reinforcement learning, RL, right? By the way, Richard is a huge Bitcoin fan. So at a conference recently, someone was like, what do you think about cryptocurrency? He's like, well, actually, I'm a big fan of Bitcoin. I think it'll be probably the reserve currency of humanity. And a lot of the stuff he's been saying about reinforcement learning, continuous learning, I encourage people to read The Age of Experience by Rich Sutton and David Silver from Google. Continuous learning is his view that reinforcement learning is really under applied, and we need new AI models to continuously learn. We can't go through this pre-training, post-training dance that we're doing now and building these gigantic data centers. We have to build more compute efficient architectures that continuously learn, just like we continuously learn. And what he said about the critical ingredient for human progress is decentralized coordination. We need mechanisms that allow for decentralized coordination. That is the only way to drive human progress. And what we're seeing now with Anthropic and OpenAI and a small handful of companies is the opposite of decentralized coordination. It is centralized command and control communism. That's what it is. You have 5 people basically dictating and controlling the direction of these things.
And look, 2 things based on what you said. First off, it's funny you bring up communism because in a free market, incentives rule everything. They rule how many, people want a certain number of oranges and strawberries to eat. People want a certain number of employees. People want a certain number of other goods or medicines or whatever. So everybody makes their own incentives to get the things they need. Every individual comes up with the incentives to get the things they need. But in a communist society, this is why communism fails. And I'm not trying to be political here, but in communism, a central authority, the government, has to figure out the incentives of all 300 million, give or take, of its citizens. That's impossible. That's why Maoist China, 60 million people starved. That's why so many people starved in 1960 Soviet Union, is because when you have a central authority trying to figure out the incentives of 100 million people or more, it's impossible. And yet London or New York City, where there are no farms in New York City, and yet no one ever starves, it's because everyone has incentives to figure out how to get the goods they need. So, okay, that's the political rant. But the other thing you mentioned is, in a centralized company, centralized AI companies like Anthropic, they have to hire employees. So they have to post a job, and then literally they have to get down on their knees and pray to God that the best people apply for those jobs. And then they have to pay enormous amounts of money because, like you said, it's like 5 companies. They're all competing for a small pool of resources. But, the best programmers in San Francisco and a couple of people who they're willing to let be remote. Whereas this is so important. Let's just say Bittensor/TAO represents the decentralized AI version of all those companies. Everybody in the world is open to be a miner for a subnet. So I don't have to just live down the street from Anthropic in Silicon Valley to apply for a job there. I could be in Uzbekistan and I happen to be working on the greatest AI model in the world, and I could then use that resource and become a millionaire by working on a subnet. And I was talking to Data Universe, which is subnet 13, I think. It's run by Macrocosmos. And Data Universe scrapes data from big platforms like Reddit or Twitter. And they were describing to me, they had one miner who was from Moscow or whatever, and he had this really clever, innovative way to scrape as much data as possible for as cheaply as possible from Twitter. And they never would have thought of this idea. This guy had a very clever, creative idea. But then suddenly other miners came along from literally Uzbekistan and had even more clever idea for scraping data from Twitter. It's not easy, by the way, to scrape data from Twitter because you have to pay a lot of money if you just simply buy the fire hose of data from Twitter. So to do it cheaply and efficiently, you have to come up with really clever ideas. And So now this guy from Moscow he's not one of their top miners because more and more clever ideas started popping up. They have no idea the names of these people, and they don't even know necessarily how they're getting this data, but they're getting it. And you can't hire for that. I can't hire the person in Moscow who's going to have the most clever idea of scraping data off of Twitter. It's impossible. So that's why you see like a Ridges all of a sudden beating the benchmarks of the multi-billion-dollar companies like Cursor and Claude. That's why you see, a Yanez, come up with better AI-driven identities to challenge bank compliance laws. I think this is Subnet 91 or 92, I forget. That's why you have a Bitmine is now the best by far of deepfake detection, whether it's videos or photos or whatever, and on and on and on. We could probably list a whole bunch of subnets that are the best in the world because their resources, their quote unquote employees, but are actually our miners, are trustless, permissionless, unknown, but they're the best in the world and they're competing for millions of dollars.
Yeah, it's really incredible. This is why I say Bittensor does to companies what open source does to source code, really. And a lot of people misinterpret this and they go and say, oh, no, open source is different. I'm like, no, you have to understand, Bittensor creates permissionless ways of decentralized global contribution to technology innovation, very similar to how open source does this with source code. And
Yes.
you don't know who these people are. Mark Jeffrey, very timely.
Oh my God, you just posted this. I can't believe we were just talking about this and Mark Jeffrey posted this. Read this.
It's crazy.
Read this.
This is literally moments ago. Mark is spying on us or something. So he puts out this tweet. I just reposted. This is today, October 16th. Overlooked efficiencies gained with Bittensor subnet-based companies. No employees, so no recruiting, no hiring, no firing, no HR department, no people issues, no legal issues. Only performers who get paid anything. And the chain pays them, not you. Workers from all over the world with no office space, and your company is born with thousands of gig workers. Like this kind of sounds like too good to be true, but it's actually the way Bittensor subnets work. And if you can harness the power of these incentive mechanisms properly, and you create the right incentive structure, which is really an art, and it's becoming more and more of a science because it's becoming better understood, you can create the same efficiencies that super disruptive open source technology provides in the context of proprietary technology. And it's incredibly profound to watch and obviously extremely disruptive.
And it's fascinating. So a couple things to unpack there. So take Cursor. Cursor makes AI-driven code, the vibe coding, the text-to-code. And Ridges, a subnet on TAO or Bittensor, does similar things. And Ridges has recently passed Cursor and all the benchmarks in terms of the code created. And Cursor has raised billions of dollars or hundreds of millions of dollars. I don't know the exact
Billions at
amount.
this point. Yeah, it's billions.
Billions.
Now.
And they spend the money, by the way. To hire good programmers, you're spending hundreds of millions of dollars now.
Very unprofitably, extremely unprofitably business because they have to pay billions of dollars on inference costs to guess who? Their essentially parent company for infrastructure, Anthropic. And not many people realize this. Roughly half of Anthropic's code generation revenue or more, I would say, and this is billions in revenue, comes from a little startup called Cursor that did not exist a couple of years ago. And they're highly dependent on one another. In the same way that OpenAI is dependent on Microsoft's infrastructure or Anthropic themselves is dependent on Amazon, right? And so in many ways, Anthropic is a vassal state to Amazon and Cursor is a vassal state to Anthropic.
Which, by the way, gets into a whole other issue, particularly what's going on lately between Oracle, AMD, NVIDIA, and ChatGPT, which is one giant circle jerk of scam against the average investor. But
totally agree.
In terms of Cursor and Ridges, Cursor, here they are. They've spent hundreds of millions of dollars to create an AI model for coding that is weaker, significantly weaker than Ridges. And this one thing I'm about to say is the entire reason why Bittensor is going to be worth tens of thousands of dollars per token at some point. Ridges has spent in total about $120,000. So, and $120,000. And the system, the incentive mechanism, and I always say with Bittensor, the incentive is the product. The incentive mechanism around TAO basically allows this free market of resources to gravitate towards the best talent, in whether it's the subnet owner or the miners or the validators, whatever. All the best talent gravitates together to create the best products. Basically, the incentive mechanisms allow good ideas to mate with
Yes.
good resources, and the result of that mating, the child is a great product, usually the best in the world.
Yeah.
And again, only $100,000 spent. That's the efficiency that Mark Jeffrey is referring to in that
Yes.
tweet.
Yeah. What's actually pretty crazy, something that you just made me think of as you were describing that, is Bittensor really applies this machine learning framework to digital technology innovation, really capitalism as we know it, because digital technology is sort of eating all of capitalism, right? And when you apply machine learning to capitalism, what you're doing is you're applying what's called a loss function to capitalism, or for people who don't understand what loss functions are. And by the way, this is exactly how Bittensor works at a fundamental level across all of these subnets, including human consensus and the subnet incentives themselves, the subnet incentive mechanisms themselves. Is a loss function is kind of like a reducing curve. It looks like a hockey stick, but it's kind of like the inverse of a hockey stick that you would see in a growth chart, sort of flipped horizontally. And so it's like a reducing curve, like gradually reducing curve. And as you reduce the curve, as you have a more smooth reducing curve that drops faster, that means your error rate is dropping faster. It's reducing the loss, it's reducing the error rate. And when you apply that to something that's a technology product, as you described, as a good or a service, and you optimize an incentive against that loss function, you can basically reduce the error rate of all possible capital waste and capital loss as efficiently as possible, as effectively as possible, orders of magnitude more so than you can when you're hand tuning and hand regulating the incentive as you would with a technology startup and capital, equity capital, manually hiring people. It's almost like the difference between a human operated elevator from the 1800s and a fully automated elevator, that we experience today. You click a button and it just goes up and all the technology handles it for you. Startups manage their incentives in ways similar to human operated elevators from the 1800s when compared to Bittensor subnets that look much more like these modern elevators where you just click a button and the technology optimizes everything for you. And that's really how capitalism should work. I think it's kind of like, it's sort of an obvious design improvement. We're going to look back, 10 or 15 years, our grandchildren are going to be like saying, how did you become so successful? It's like, well, I did this podcast with James and we were early Bittensor evangelists when we were growing up.
Well, it's true. I think, again, there's the outrage feeling. Like when I see how traditional equity works, when I see how startups work, when I see how inefficiently, things like hiring happen, business development happens, all these things, I feel outrage. And Bittensor, TAO solves these issues the way Bitcoin did with currencies and really with banking and central
Yes.
banking is what Bitcoin solved. Is they solved the problems of they didn't solve the problem of currency. They solved the problem of intermediaries and centralized institutions controlling my
Yes.
personal currency.
Yes. Human coordination problems. These are really human coordination
Yes,
problems.
that's a good way to put it.
Yeah. When you have the wrong structure and you don't have decentralized cooperation and decentralized coordination, like Rich Sutton has been advocating, you have inferior methods. It's as simple as that.
Right. It's like communism versus free markets. It's like someone else is planning my incentives someone else is deciding what my incentives are instead of me deciding. So, and by the way, employees working for a boss have this problem, is that I'm always dependent on the boss figuring out what my incentives are. Oh, can he please raise my salary? This is why factories back in the day would give you the loan to buy your house, so you can't move away from the factory, and so they have even more control over your incentives. But now, again, if I don't like, let's say I don't like what Ridges is doing with their alpha token, I'm going to stop being their miner. I'll create my own subnet with my AI models, or I'll mine for somebody else, for another subnet doing AI coding. Like, it's competitive and it's a free market of incentives. But, it's funny, this all veered off from what the basic question is: what, good or bad, the halving?
No, I think it's going to be very positive because in the same way that Bitcoin has created more scarcity after every halving And over the same time frame, more price discovery around the cost of electricity has also occurred relative to the value that Bitcoin has been kind of representing in terms of its incentive for miners. I think the same thing will happen with Bittensor. Every halving, yes, the amount of TAO injected into these pools and the amount of TAO emitted will drop by half, right? 50% every 4 years. But correspondingly, we're going to have much better price discovery at each one of these sort of epochs and intervals, right? Just look at where we're at right now. I mean, 4 years ago, we didn't have subnets. 3 years ago, subnets were born, just the notion of subnets on Bittensor as a protocol upgrade. And then earlier this year, we had this big democratic change in terms of how the staking and the free market kind of capitalist dynamic would unfold, with anyone holding TAO being able to sort of exhibit and express their opinion in terms of which subnets should be worthy of incentive, right? And now we're seeing 100 plus subnets live and iterating. Most of the top subnets did not exist 9 months ago. And we have many of them that, if they were valued as conventional startups, would be worth billions of dollars each. All of Bittensor is still only worth, I guess, $4 billion. We've had some price action in the last couple of weeks. It's still only worth $4 billion. Like you mentioned earlier in the show, TAO should really be at $3,000, $4,000, $5,000 per token today. I wholly agree with you. Fully agree with you. Now, obviously, we're both large TAO investors. I think both of us probably have equally somewhere in the neighborhood of like $50+ million invested into TAO, right? I've been saying this for over a year, well before I had any major investment in TAO. You can go and look at the history of my posts online, my advocacy for the project. And I'm not a cryptocurrency advocate like broadly. We have like a tiny handful of cryptocurrency investments. TAO is by far the largest investment we've made in any single asset of all the investments I've ever done. And I was saying very similar things even before subnets really existed in early 23 through to the end of 23. And I believe it now even more than I ever have. And the other thing that a lot of people should really understand is, both of us are certainly large TAO holders, but we're not in the top 10. We're not in the top 20. There's plenty of people who, by the way, to their credit, found and discovered Bittensor very early on. They were mining the project before price discovery really occurred, when TAO was trading at $5 or $10 or $20. And they mined it pretty aggressively, and they were rewarded very significantly for their observations and for their conviction. And maybe they have 50,000 or 100,000 TAO or whatever it is. And so I think that's really incredible. It's a sign and an example of how permissionless and democratic this product has been, this technology has been for many years now. And going forward, I'm very optimistic about the halving. I think Sami Kassab actually put a great post out describing all of the fundamentals around, we're going to see more scarcity of TAO. That's going to drive more interest in TAO as an incentive for driving better subnet outputs, better competition, better innovation. And I think we're going to see more staking, right? Because the TAO value circulating is dropping now by half. And where are you really going to see price action? It's not going to be in holding your TAO on the root network, getting 5% yield or something. The government can pay you that, right? You're going to want to stake it into subnets. And one of the charts I think that we've seen move up very consistently since the early part of the year, from zero actually, is the amount of TAO staked into these subnet liquidity pools by TAO holders has gone from 1% to almost 14% today, right? 0% in the last. And the thing to understand, again, is there's 10 million TAO circulating on the network, right? And so 14%, we're talking about 1.4 million TAO, right? That is $500 million. I put a post out the other day illustrating this. 1.4 million TAO at $400 per TAO is over $500 million of liquid capital. And in the history of capitalism, for any protocol, for any experiment, we have never seen permissionless funding, permissionless crowdfunding, by the way, not crowd donations, crowdfunding.
Right. We have incentive to make money.
Decentralized, permissionless, open source AI protocols by everyone around the planet has invested $500 million into these subnets in the last 8 months alone. Now, again, $500 million. Like, people are really jaded with these huge numbers. OpenAI is another $50 billion fundraiser. People are like, $500 million, JJ. Wake me up when it's $5 billion. Okay, let's wait until the end of next year. It'll probably be $5 billion by the end of next year. But $500 million is nothing to sneeze at. $500 million is a lot of money, right? And as you mentioned, Ridges, they were only needing to reward their miners with a few $100,000 to cross Swebench verified, which Anthropic spent hundreds of millions of dollars building their models and perfecting their models to reach 72% accuracy. Ridges miners saturated at above 80% in the course of like 60 days, which is crazy.
By the way, the Ridges miners made millions of dollars. It just didn't come out of the subnet owners' pockets. It comes out of the TAO ecosystem. But it comes out of that 500 million that you talk about that's been, staked into TAO. But and again, all those people who stake into the subnets benefit from that. They get 100% APY. Yes. They get potentially price appreciation. At different periods, Ridges has gone up over 1,000%.
TAO holders are the VCs. TAO holders are the VCs.
Right.
Bittensor is so unbelievably disruptive. This is the thing that just gets me incredibly animated because I actually am a professional VC. Like, professional. Anyone can be a VC now. By the way, it's actually already true, and a lot of people don't quite realize this. From a regulatory perspective, you do not need a license to be a VC, right? I didn't have to take any tests. All I had to do was convince people to commit capital to my ERA, exempt registered advisor, SEC-regulated funds, but I didn't need a Series 7 or any of these licenses, right? So it is actually technically true that anyone can be a VC. The problem is it is an extremely closed ecosystem to people who don't have a lot of specific know-how and connections and historical experiences and privileges that I have been fortunate to be endowed with in my technology career that the vast majority of the population does not have. Guess what? Along comes Bittensor. You can buy some TAO on Coinbase. You can buy it on Binance, wherever your local cryptocurrencies are traded. TAO's traded everywhere now. And you can take that TAO and you can get a wallet like a Talisman or a TAO app or many of these options out there. There are plenty of great options. And what you do is you treat your TAO like a VC treats their committed capital in a fund. And you stake that TAO. You stake that TAO into these subnets. And yes, there is risk of loss of funds. Yes, there is significant asymmetry. Yes, you need to do your research. Yes, you need to do your diligence, but you are the VC now. And by the way, you don't have to pay anyone a carried interest or a limited partner fee and only take 2% of the management fee. Your TAO is your incentive to drive digital technology innovation. There's nothing that can compete with that. VC cannot compete with that. Corporate balance sheets of Microsoft and Amazon and IBM and all these other gigantic companies cannot compete with that. The sum total of fiat currencies cannot compete with that. Because, by the way, fiat currencies are constrained to the people that are allowed to hold those currencies, which not all nations allow all of their citizens to hold all the other nations' currencies. Sometimes it's actually illegal. Like, if you're in a country that's having a trade war or has sanctions issues with another country, it's actually illegal to hold their currency in some cases. That's not the case with the dollar, but it is certainly the case with other currencies, right? And so this notion of freedom of expression, of capitalistic digital innovation, it has actually really never been more true than it is in the context of Bittensor. So I think the more people realize this, we're just going to have this big escape velocity moment, and probably many of these moments over the coming years. It's a privilege to be a part of this.
People often say when you own stablecoins, you are your own bank. There's no bank in the middle. You have freedom with stablecoins that you don't have when you put money in the bank. So again, stablecoins, every single person who owns even one stablecoin, they are their own bank. And what you just said is very interesting. If you own even one TAO, you're a VC now. So I ran a VC fund for a while, and what a drag. First off, there's 6 months going door to door, knocking on the doors of a bunch of idiots who happen to have inherited like hundreds of millions of dollars, begging them for money that you're somehow more special than the other people who are knocking on their doors. No one knows anything, but we're all trying to sound special and unique. And then after you start the VC fund, you're competing against other VC funds at conferences. Oh, please let me invest in you, to all the good companies. And then meanwhile, your investors are calling you like, where's my money? Like, You didn't, it's 6 months later, you haven't found the next Google yet. And, but with TAO, anybody, and by the way, then you have to be also an accredited investor, which is another gigantic scam. You have to be worth $1 million or make 200,000 a year for 5 years or blah, blah, blah. There's all these rules. But with TAO, if you own one TAO, guess what? Over 100 of some of the best companies in the world are sitting right on the Bittensor ecosystem right now. Imagine when there's thousands of subnets and companies there, you're going to be more powerful than the VC with $500 million because you don't need $500 million to get massive returns in these subnets. So it's going to be amazing what happens as people realize this. But I want to break down something you said much earlier about the halving.
Can I comment? Can I comment on one thing that you just said before we jump to the halving? And I want to preface this with some very positive comments. I'm a huge fan of stablecoins. I think they are a massive improvement over the current state of holding fiat currencies, and they enable incredible disruption to markets like, for example, the remittance market, which is hundreds of billions of dollars a year and absolutely toxic fee structures. Like just transferring money and doing a wire transfer costs $10, $20. You add all that up, it's hundreds of billions of dollars in revenue. Now,
not to mention the yield you've missed out on during the 3 days you transferred.
Not to mention the yield. So many great features of stablecoins. Massive fan, okay? However, I will share this tweet by my friend Naval, which is that stablecoins are just CDBCs with extra steps. I believe this is the case. Now, and I think this is the case because over time, eventually, as the world does in fact move to a Bitcoin reserve currency standard and a Bittensor reserve incentive standard, which is, I think, things that we both believe, over time, I believe stablecoins will go away. Now, I don't know what that time frame is. I would say it's probably many, many decades. It's probably many decades.
I believe you, but what's really key is that stablecoins are causing, this is why I would never invest in a stablecoin issuer like an ENA or a Circle or whatever. There was $27 trillion worth of stablecoin transactions last year compared to 15 trillion of Visa transactions. So stablecoins are being used pretty heavily around the world right now. But I do believe you, they should go away ultimately because they have the same problems or many of the same problems as fiat currency, which is inflation. But also, here's what the good thing is. Stablecoin usage right now is creating infrastructure. Like you're creating things like Aave, which is lending protocols, Chainlink, which is, these oracles to get offline information onto the blockchain. You're creating exchanges like Fluid or Curve or whatever. It's basically creating an entire infrastructure so that whatever becomes the currency of choice, whether it's Bitcoin or Ethereum or Zcash or whatever, doesn't matter. The infrastructure is the valuable, is the scarce thing that's being built. Stablecoins are not scarce. Even the stablecoin issuers are not scarce. Everyone's building one now. But the infrastructure is going to be the scarce resource that you want to invest in. But and the CBDC part, I'm actually against the Genius Act that happened in the US, where suddenly every stablecoin is required to buy treasury bills. Guess what? That just forces every stablecoin issuer to lend money to the United States. It's kind of like this scam that the US is doing so that they can basically inflate their money without anybody realizing it because everyone is required legally now to lend them money. So of course they want the whole world to use stablecoins because then the whole world has to lend money to the US. It's a gigantic scam. So Correct. I agree with you. That's ultimately the seeds of the end of stablecoins are there, but the infrastructure will always be needed. But I wanted to mention about the Bitcoin halvings. There's a reason why, and look, many people know this who are listening to this podcast, but I just wanted to explicitly say it. Every day, let's say I'm a Bitcoin miner, and today I've mined 10 Bitcoin. Hooray! I've mined $1 million worth of Bitcoin today. But here's the problem: is that my electricity bills are enormous. So tomorrow I have to sell 9.5 of those 10 Bitcoin in order to pay for the electricity bill. And I have to sell tomorrow because Bitcoin's price might go down. It's so volatile. So every day there is selling pressure from Bitcoin miners. And every time there's a halving, as you pointed out, there is less selling pressure every day. Now with TAO, it's not the exact thing, but for instance, people who provide compute, like let's say on Targon, I'm a miner, I'm providing the latest NVIDIA GPUs. Well, those GPUs cost me money plus the electricity. So I make some alpha tokens. I kind of have to sell them, some portion of them the next day. Not every TAO subnet is like that, but then there's other issues. Some alpha might not have the subnet owners might not have figured out how to infuse value into their alpha. So if I'm a miner, I better sell as quickly as possible before the alpha goes down. So there's all sorts of reasons why there's selling pressure. When the subnets have halvings, the selling pressure will go down. Now, with the TAO halving, it's important to realize this halving mostly affects, and this gets technical, so I don't want to get bogged down in it, but this mostly affects how much TAO and alpha are going into what's called the liquidity pools of each subnet. And the liquidity pools regulate how much volatility there is in the price of a subnet token. So what's going to happen to new subnets that don't have big liquidity pools because the halving happened is that their prices are going to be more volatile, which, by the way,
Yep.
some people think is a bad thing. I think is a very good thing.
Totally agree.
And just like the fact that when Tesla started, of course it was more volatile than General Motors. General Motors has been around 100 years. Tesla was this baby company, started by this mad genius. So, of course it's going to be more volatile until it proves itself. TAO, and I wrote this to Jake, Steve's the founder of TAO, that accidentally or not, he created the perfect system that perfectly emulates how the free markets work, including the fact that newer startups are more volatile and riskier than the older, more established companies. That's how it should be. That's life. I actually think no change. Like everybody was writing these papers, let's change this, let's change that, let's change this. I wrote to him, don't change a single thing. It's really perfect what you've done. And newer companies should have more problems than older companies. That is life. And by the way, if you change things now, right before a major event, then the whole idea of a crypto being trustless goes away. I want to trust that the founders can go off on vacation for the rest of their lives, but that the system they created perfectly stands unchanged and unblemished.
I think that there's a lot in what you said and generally totally agree. I think Satoshi walked away really from Bitcoin well before the protocol was completely cemented. In case people don't know, Coin is still going through upgrades. People are still changing code. It's still getting pushed out. Miners are still updating their code. There's bug fixes. But I would say after around 2 years, and Bitcoin is, again, much simpler of a design and system than Bittensor. Jake and Allah were very intimately involved in pretty much everything in protocol design, engineering leadership, major decisions for, I'd say the first 4 years. And in the last year, noticeable reduction in that, and a lot of other great contributors picking up and making very significant, meaningful contributions from many companies in the ecosystem, not just the company that I started with Cameron a year ago, Latent Holdings, but like there's several other great contributors in the ecosystem. There's more open source contribution happening. Jake is still certainly very involved, but I agree with you. I think over the next year, it's really going to be this kind of test how stable Bittensor is and how resilient it is in the absence of really active hands-on leadership and influence by the founders. And of course, specifically Jake, but both Jake and Allah created Bittensor. So yeah, I totally agree. And I also agree. I think the success of DTAO really defends what you said, which is it's been incredibly successful for the first 8 months at least. And for the success of many subnets that we've seen with the changes, that happened, I think that just brought on a huge amount of innovation and a massive upgrade in what Bittensor could actually be capable of. And I think in this first halving event, there's going to be a lot of things to look for. The big thing is going to be, what is the durability of the incentive design for many of the subnets during and post the halving? And will people really need to fundamentally change the design? I think if a lot of the initial early designs of these incentive mechanisms at the subnet level don't need to change that dramatically, I think that will actually be a really positive thing. I think if after the halving, people have to really heavily modify and heavily change the incentive structures, which by the way, kind of happens on its own anyway. Again, the thing that people need to understand is Bittensor subnet products are the incentive mechanism. And so you have to iterate on them constantly regardless, totally independent of the halvings. But if specifically because of the halvings, there's major changes in the way alpha is emitted to miners that subnet owners have to actually change, I think that'll be kind of like a yellow flag. But so far, I don't see the need for that. And I think generally what people are anticipating is, well, there's going to be half the amount of TAO injected into these pools. And as a consequence, unless we see the price go up by 100%, essentially, people are going to get paid half.
By the way, halving primarily affects the tau and alpha injected into the liquidity pool. It doesn't really
Correct.
affect the rewards that much. The
That's correct.
subnet halvings will affect the rewards, but that's
Yes.
not going to happen for at least another year, with a year and a half for these
Yes.
subnets.
Yes, but
So
all the
that's
but all the but all the subnets are denominated in tau, right? And so, the value of tau is reflected in the value
yes,
of the alpha tokens, right? So like if tau is $1,000 instead of $400, many of these alpha tokens would be trading at hundreds of dollars instead of, 50 or $60 in the top, let's say the top handful of subnets, which I think is eventually going to be the territory we get to. And I would also actually say, because most markets and complex systems, even biology, follow a Pareto distribution. There's a very significant concentration of value in the top 10% or top 20%. And then there's kind of like a long tail of distribution of value after sort of the top most highly concentrated assets. I think that's also going to be the case with subnets. There's going to be, the top 10 or 20 subnets are where 90% of the value of the network will be. That's where people will stake most of their tau. And as a consequence, we could actually see the top one or two or top three subnets actually come close to the value of, relative to the value of all of the tau, because many of these alpha tokens could actually have so much tau staked into them that the alpha tokens themselves are actually trading at a higher FDV, let's say, than the total FDV of tau, because the supply differential, right? The supply differential would be that much larger. I think over time that's less likely, especially as we have more tau in circulation. Right now, half of all the tau is essentially in circulation. But if you really look at the fundamentals, there are certain things that you should expect about the pricing of the top 5 or 6 subnets relative to the pricing of the overall tau supply, which is Bittensor itself. And I think that's going to be something that people start to reason better about. We have a lot of analytics on TAO app that give people a huge amount of data in really coming to better terms with how these numbers work.
And it's interesting because the value of these subnets can go so high. We're going to start seeing VCs who, instead of investing in the equity, they're going to start investing in the alpha tokens. We've already seen that a little with DSV. We've seen that with latent holdings. And now what's very interesting, you mentioned Mark Jeffrey earlier, but Mark Jeffrey just started Stillcore, and he's partnered with Rob Greer and Jason Calacanis. So I've known Jason for 30 plus years now, back when he was doing the Silicon Alley Reporter in 1995. It was all like one big family back then in the Flatiron district of New York City, where we were all starting web design companies. What's that you're showing me?
So someone gave me a pen. Actually, John Durbin, who is kind of the chief architect of Shoots, which is the top subnet, or actually one of the top 2 or 3 subnets now.
Yeah.
It's an inference subnet of trillions of tokens per month. And he's like kind of a carpenter, and he made these custom pens, and he sent me one. It's really cool.
That's beautiful.
Bittensor logo on it. Didn't
Oh
mean
my
to interrupt
God.
you.
I want to buy one of those.
Yeah, I don't think he's actually selling them. You have to like contact him and send him like a nice message or something, and he'll send you one as a gift.
But Jason Calacanis is, huge VC, or basically he's huge as an angel investor. In fact, he wrote a book, Angel.
Yes.
He was on my podcast for that book. And he runs the All In podcast. I've been on his This Week in Startups podcast many times in the past. And among his closest friends is Chamath, Palihapitiya, who's a huge billionaire investor, and he's been interested in TAO. So now at least 2 or 3 times they've been talking about TAO on their podcast, which, by the way, every venture capitalist in the world listens to. This is a huge thing. We're starting to see the beginnings of that institutional ownership. And by the way, there's not to mention there's, XTAO, Oblong, my own company, TAO X, which JJ, you're an advisor of too, and you're an advisor on XTAO. And then you have other, these treasury companies around the world springing up. We're all buying TAO every single day.
Tell us about your strategy with TAO X, James. How's it been going so far, and kind of how have you been guiding the holdco and what you've been seeing so far?
I remember before this all happened, the same day I met you in Paris in June for the Proof of Talk conference, I also met Rob, who's now partnered with Mark on Stillcore. I met him the next morning for breakfast, and it was the day I was announcing TAO X. We were talking back and forth, like he was wondering. At first I was saying to him, oh, do a public company, don't do a VC firm. And, but there's a couple of things that's the benefits of the VC firm is that he could buy the subnets a little more easily than I can. I have a somewhat fiduciary responsibility. Of course, all things are on the table. I really can't. The other thing with the public companies, you can't say too much, but I will say 100% of everything is on the table. And of course, we'll have regular announcements and transparency as to what we do. But, Rob could just do what he wants. He doesn't have the same type of, SEC type of responsibility when you run a VC firm. And also with a public company, when the stock goes up, everyone loves you. When the stock goes down, oh, this company needs to better manage. Like, it's amazing how people's emotions just change every single day based on whether the stock goes up or down. And my point is, listen, we're all going to create the same amount of value. We want TAO to go up. And so there's two strategies. One is, how can I inform the world about this amazing product/ecosystem of Bittensor and TAO? So I created the TAO Daily, which is basically kind of a layman's, it's like CoinDesk was to Bitcoin, what the TAO Daily is to TAO. It's a way to explain to the retail investor, hey, this is what's going on in the system. I'm not giving you too much math here. I'm just telling you what's going on. In general, I'm optimistic. And every day we have like 10 to 20 articles explaining the different subnets, reasons to be bullish or bearish potentially on TAO. So we've kind of created, between that and the TAO Pod, which you and I do, we've created, I think, the main media resources about TAO. Now, there are many other good ones too. There's Hash Rate by Mark. There's Revenue Search and by CM and Mark at DSV. There's Novelty Search by Jake.
Ventura Labs. By the way, and
yeah,
this
Ventura
is really
Labs
awesome.
is a great one.
This is really remarkable. A lot of people don't, I think, appreciate this enough. And I think it's quite unique for any, frankly, probably even any of the top 20 cryptocurrencies or top 30 cryptocurrencies. It's like you have probably a dozen different media personalities and certainly more than a half a dozen podcasts. Like our podcast, probably the top one. I think statistically that's true.
Yes.
Half a dozen different podcasts run by different people. This is really incredible. And they're working at different companies, right? We're not like all in cahoots. We're actually kind of like frenemies, like competitors and stuff. And I don't think that there's a single ecosystem. Frankly, I mean, maybe aside from like the top 3 cryptocurrencies or the top 5, I don't think that single.
I would argue the top 2. Only Bitcoin and Ethereum have
Bitcoin
ecosystems.
and Ethereum. I don't think any of the other cryptocurrencies, I totally agree, other than Ethereum and Bitcoin, have half a dozen or more different podcast, like community-run podcasts. That's incredible. Truly a statistic that's like mind-blowing.
Look, earlier we were talking about stablecoins. And so we mentioned Circle and ENA. So ENA is a crypto that issues the stablecoin USDE. There is not a single podcast just dedicated to ENA. So even though $27 trillion in transactions among stablecoins, doesn't matter, not that interesting. This is a philosophy. It's the outrage emotion. It's the recreation of free markets in a digital universe. And as you said before, digital technology is eating, capitalism. So it's eating the entire economy in a good way. So TAOX, look, the main goal of any public treasury company is to increase tokens per share. So if you have 100 shares, and let's just make it up for any cryptocurrency, that 100 shares is equivalent to 1 token of your digital asset treasury, then hopefully in a year, your 100 shares equals 2 tokens, because the company is clever about how it's increasing tokens per share. So there's a lot of ways we can increase tokens per share. A, staking in TAO increases tokens per share. B, potentially buying subnets increases tokens per share. I'm not saying one way or the other. We haven't made any announcement yet, but potentially increasing your exposure to subnets increases tokens per share. Making revenues, perhaps through TAO Daily, increases tokens per share. Borrowing money and then buying tokens could increase tokens per share. So Michael Saylor is very good at increasing the tokens per share of MicroStrategy. An equivalent company was Semler Scientific. They were a digital asset treasury company. They were not good at increasing tokens per share, so they traded for 1 times net asset value, and they just got acquired because they got acquired by someone who's going to be better at increasing tokens per share. Whereas MicroStrategy trades for about 2 times NAV because he's making more than 2 tokens per share on a regular basis. So I think BMNR is going to be successful as well, and that's how you sort of value these companies. But I think by being more active in the ecosystem, investing in companies related to TAO and perhaps investing in subnets, perhaps creating our own subnet and having some innovative idea, these are various ways I think we can get aggressive about increasing tokens per share. And I think I don't know what we'll do. Obviously we're thinking of lots of things, but we're definitely going to do it. And my main purpose today, this day, is increasing public awareness of TAO. Doing this with you, doing the TAO Daily. We just raised $11 million, including DCG, and that's on top of an earlier raise that we did, which was on top of an earlier, nice cash amount that we did.
Nice.
And I think for a public company too, everybody went out there and raised, oh, we're going to raise $500 million and buy Dogecoin. Your current shareholders don't care how much you raise. This is what we were talking about before with equity issuance. If you're gonna put all your cash in a particular digital asset, you just need that digital asset to go up. You don't need to buy. It doesn't make a difference if you have $500 million worth of it. If you had to use stock to get that $500 million, like, if the $500 million was magically created, then that's great, but that's not going to happen. So everybody went out there. The banks did a giant scam for about 4 months. April, May, June, July, maybe August too, where they convinced every crappy microcap company to stop their old business, raise $500 million to buy Fartcoin or whatever. And then they took a 7% fee in every deal. They took a 7% fee. And then the people who invested in those deals, all 95% of them dumped as soon as they were legally allowed to dump. I know this for sure. And the people who were the current shareholders in the beginning, they got so excited, they're all trading underwater now. So I wanted to do something very different. In fact, I lost business partners over this, which is I approached public companies, and I knew the TAO, they was called Synaptogenics. I knew them for 20 years. I approached them and say, look, you have cash in the bank. We don't even have to do a big raise. Let's just buy. I explained TAO, and they were all already on board. Let's just buy this asset, which is going to go to 5,000, 10,000 or more, and everybody will benefit. We don't need to do the $200 million raise and give 7% fee to some scam banker. I would say it's going really well.
That's awesome. Exciting.
And
I'm rooting for you.
It's great that we're at this time right now, because here's the catalyst today and tomorrow and the next 24 hours and the next 48 hours. By the way, there's a reason TAO hit multi-month highs over the weekend, exactly when Bitcoin and all the other tokens were crashing. TAO is decoupled in large part, at least recently, from Bitcoin and Ethereum, which is, thank God, because Bitcoin and Ethereum have been crashing and still are kind of going through it. And while TAO was hit an 8 or 9 month high on Monday. So, the catalysts are A, the halving. We already mentioned that the selling pressure is going to go down. B, what you guys have done with deregistration, I didn't fully appreciate, but bad subnets get to go away. Good subnets get to take their place. And that is going to create more demand for those alpha tokens, and which means more demand for TAO. This is happening right now. Ridges is, for better or for worse, an upcoming catalyst. They're going to release a commercial product that's better than Cursors and Claude. Cursors, between the two of them, they're worth like $100 billion. And guess what? Ridges product is going to be the best. And that's going to enormously increase not only the demand for Ridges alpha tokens, which again increases demand for TAO, but it's going to increase the demand to, hey, I want to have my own subnet. This guy is worth billions now. I want to create my own subnet. And in order to create a subnet, obviously, you need TAO to register the subnet. The validators need TAO to validate on your subnet. And so enormous buying pressure on TAO at the exact same time the halving is happening, which is going to reduce the selling. So what happens when supply goes down but demand goes up? Boom, price goes way up. So, and in addition, institutions are accepting the fact that TAO is a player. Grayscale just filed to do a TAO ETF. There's companies like mine. There's companies like yours and Stillcore and DSV buying alpha, which again increases demand on TAO. Every week, there's at least one new announcement of institutional demand raising their hand for TAO. So these are just all enormous catalysts. Doesn't matter what happens to Bitcoin. You can't stop these catalysts for TAO.
Totally agree. The next few months are going to be extremely exciting. And yeah, I'm looking forward to doing the podcast more consistently every week, hopefully.
Yes.
And we don't have to make them multiple hours, but at least to kind of check in and give people a pulse on the ecosystem. There's a huge amount of stuff happening. I think we have probably more than 20 subnets that are like very seriously cooking, shipping constantly, and have exponential rates of improvement. So extremely exciting times.
Yeah, I agree. And look, Joe, once again, always a pleasure. I always learn so much from you each time that really sticks with me. Like I really remember them, and it changes my philosophy of the world from currencies to equity to now the role of venture capital and its role in the future. So I always appreciate having these discussions with you in front of a mass audience, of course.
It's my
So
pleasure. I feel the same, James, and I'm really looking forward to the future ones we do.
excellent. Thank you.